SIP in debt, gold and equity. What are the important aspects investors should take note of? Financial expert Mr. Ramalingam will explain how to use these three asset classes effectively.
Equity may perform and give you good returns in the long run. In short term, it may not give you good returns. If you have a time frame like 1 year, 2 year kind of time frame, then debt funds will work. Say you are investing every month to pay school fees, college fees for your kids. Then doing an SIP in debt funds can help instead of investing in equity funds because you have only 1 year time frame. Short term. In short term, equity mutual funds will not work. Also, gold funds are highly sought after SIP because gold adds more stability to your portfolio. One side you are investing in equity, another side you are investing in gold. When the equity market will go up, when there is less certainty, when there is more certainty in the market, equity will go up. When there is less certainty, gold will go up. So when there is a recession kind of situation, gold will go up. When there is recovery and boom, equity will go up. Having both in your portfolio will bring stability to your portfolio. So having proper asset allocation is more important. Winners get rotated. At times equity market works, at times debt market works, at times gold works. Depends upon time frame. If you have a longer time frame, invest 70% of your money in equity, invest 5 to 10% in gold. Balance money you can invest in debt. If you are someone who's retired, then invest 70% of your money in fixed income, 5 to 10% in gold, balance 20-30% in equity you can invest. So depends upon your requirement, risk profile. Please discuss with your financial planner who will be able to give you right asset allocation for it.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.